Welcome to the Oxen Group Nightly. My name is David Restell. I'm the CEO, President, and Founder of the Oxen Group. Please check us out at www.theoxengroup.com. Well, it is June 2nd. We're going to do our Thursday market wrap-up to start off with. We'll follow it up with looking at a couple of new positions we got into today, as well as some of our other current positions and exits we took. We'll also give you an update on what's going on with Giorgio's Corners portfolio, as well as our extended value portfolio. And as always, forecast the day coming tomorrow, and also please check out our disclaimer at the end of the video. So the market continued a weaker day today, down a little bit on the Dow. Actually, the Nasdaq closed the day in the green, as tech was definitely the leader on the day. There were a lot of attempts to get the Dow into the green throughout the day, but couldn't ever get all the way up into the green, and fell down towards the end of the day as we got a little selling pressure as people were exiting before tomorrow's jobs number. Definitely what weighed on the market today was the initial jobless claims came out a little bit worse than expected, which gave a little bit of attention to tomorrow's unemployment numbers, which are expected to be pretty weak tomorrow. Also, commodities weighed on the market today as oil supply came out much higher than expected, and silver and gold prices kind of followed oil down as they dropped lower as well. We also had factory orders. They fell year over year 1.2%, and they missed the expectations for them to drop just 1%. And oil dropped very heavily on the day, intraday, before a late rally after a weakening of the dollar. The Greek crisis seems to have been averted for the time being, as they signed into legislation today, a sort of a relief package, and that weakened the dollar, which helped oil rise. But I think there are still a lot of supply issues out there for oil right now, and the long-term trend we think is probably oil is going to be going down to about $90 a barrel before it's going to go back up to 110. Next week's OPEC meeting expected to raise supply, and also they also want to try and get oil down to around $70 to $80 a barrel. So we could be seeing a pretty drastic increase in supply from OPEC. The only good thing that did come out on today was the non-farm productivity and the unit labor costs. Both were non-farm productivity was better than expected. Unit labor costs were a little weaker than expected. But as you've seen from the chart, productivity has been falling throughout the year, and labor costs have been rising year over year. And that is due to the fact that we're seeing less growth to jobs, and also more jobs added and less GDP growth. So, but that's more because of just the natural flow of growth is slowing year over year, because we're getting into better growth levels when we compare them year over year. But it was good to see those better than expected. Okay, so the market started out the day pretty strong after some weak economic data, but nothing too strong. Jobless claims were a little bit weaker than expected, but after yesterday, we were kind of expecting maybe we get a little bit of a bounce back. But then after we got those the crude inventory numbers, that really did start a sell-off in the market. Dropped us down to 12,200, which is a key technical level for most technical traders. That's where they see a lot of support on the Dow Jones right now in the upper price channel we're in right now. We popped off that 12,200 level back up to 12,280, and held there with a little bit of a slight decline towards the end of the day. But it was good to see us hold 12,200, pop off it very easily, and you saw the bots going to work at that level. We were able to play two positions today fairly well. SCO we made a little bit of money on, about a 1.5% gain after we had two strong exits on the stock at 44. We got in at 44.54 right after the inventory numbers came out. Saw those were so drastically high. Definitely was going to be a pullback in oil prices. Got in and were able to get a 1.5% gain, and then a 3% gain as well. And then after the Greece news came out, the dollar really weakened very quickly, and that actually caused an inverse relationship with oil, which strengthened the prices of oil pretty quickly, and that allowed for that to come all the way back down to our entry, where we had a new stop loss put in place. I do think the long-term trend here for oil is to drop to 90 before 110, as I said, but I think in the near term, if those jobless numbers are good tomorrow, or even just at what is expected. Excuse me. I think we could see oil popping back up to about 102, but moving into next week, we would be pretty bearish on oil. We also bought into KERX, Carex Biopharmaceuticals. This is probably the top pharmaceutical company that we play at the Oxen Group. After a really nice rally from about 505 to 555, the stock dropped yesterday drastically down all the way back to about 515, and then opened up this morning right on its 20 and 50-day moving average. Popped off that. You got a really nice bullish candlestick right there on today. You see a lot of action quickly moving up from that level, and then trading in a nice range right below this sort of resistance line you have in this kind of narrowing price channel. But if you see the moving averages, the 200, the 50, the 20, they're all pointing up. They're all ready to move to the upside. You saw the stock bounce right off those moving averages. It's going to get a lot of support at those moving averages. Even if we have a bad day tomorrow, going to get a lot of support there. And was able to close in the green, even though the market was down today, and hit a high at 526. The company's also reporting this weekend at ASCO, and last year and 2 years ago they reported at ASCO and got really nice price action right after that happened. And so we could see a little bit of that price action coming into the stock tomorrow and into next week. Other than that, we did get stopped out of our silver wheaten position after a huge sell-off in silver came today, and we averaged out for just a little bit on over a 0.5% loss. Today we also recommended a position in Eastman Kodak. I think that stock's going to bounce off of a current moving average it's on. And we did write a little story up about we like Canadian National, Heinz, McMoran, and News Corp. Those 4 stocks I think have a lot of potential to really pop on any update we get here in the future. Expecting hopefully that will come tomorrow. But if these stocks can hold their current moving averages, even if we do have a little bit of a down day tomorrow, going into next week, if we can get a nice rally day, I would put my money on a day trade on any of those 4 stocks. For Giorgio's Corner, he remained in his Unilever position as well as his Dollar Tree position. The Unilever position continues to perform fairly well. He's up about 1.5% on that, and his Dollar Tree position is down about 1%. But that is after he bought that in the middle of the day yesterday before the really big leg down, and it's still holding up fairly well considering the market conditions and what the news came out on Dollar General. And please look forward to Home Builder Equity Analytics. Those are coming out this weekend. For tomorrow, the jobs are coming. The jobs are coming. It's really all about the non-farm payrolls and the unemployment rate. Can they be better than expected, worse than expected? There's been a lot of revisions down for those numbers this week, throughout this week. And so if we can't hit those revisions, it could be pretty weak for the market. But I think with those revisions, we should be able to easily beat that and move to the upside. We do have ISM services as well tomorrow, so watch out for those. And earnings tonight with Verifone, those were a little better than expected. That's going to do it for today. Visit us at www.theoxengroup.com. Email us, call us, please become a part of 70% accuracy.